Okay, everyone, welcome. We're going to get right into the stock charts. We had a pretty weak close, and so I'm going to cover that, cover a couple trade ideas that I see going on, and we'll wrap up there. So before I do, hit the thumbs up button. I do appreciate that. Just I'm hoping to get at least 150 or so or more. It does help. So triple Qs, pretty weak close here. So I've got all kinds of lines drawn out, but the lines are levels that I expect reactions on. And we closed right at one of those lines, 271.50. What is that? Well, that's a former gap right here that we had some reactions around. So at the end of the day, I think in the last like 10 minutes, they dumped this thing right down to that what could be support. But we also had this support level right here at this 274 area, and it traded there pretty much all day. We impulsively sold off, traded there all day, and then you can see we're continuing the sell-off. So this could be a flag, a bear flag. And that is, that's what this has the potential to open up lower tomorrow. So you can see here, there's your flagpole. You've got the flag, and if you look at the measured target, it puts us right to about that 263.60, 264 area. So that might be where we're heading tomorrow, or here in the near future. So that's what that looks like to me. With that close, I would have to anticipate that. However, the way I traded this is I lightened up a little bit on my short because we were sideways all day, just holding that support line, and then right at the very end of the day, they dumped it. I don't like to see moves happen in the last 5-10 minutes. Those are kind of, you have to take those with a grain of salt. So we'll see what happens tomorrow. But as of right now, this does look like it's heading down to that 264 area. They could create a bear trap with this last candle and break it back higher, maybe pop it back up to this 274 area and run higher tomorrow. That's completely possible. So we'll watch. I don't know which way it's going. I just know that we've got some levels at 274. We closed right there at this gap at 271.60. And if we break lower, we're probably heading down to 263.80 or somewhere right in there. SPY here, you can see, SPY looks like we're heading down to the bottom of the range. The bottom of the range is going to be right about there. And we're almost there, actually, at 321.49. So pretty impulsive drop, really, from the highs all the way up here. And you can see we've just been gapping down and selling off throughout the day. This, we have a gap right here. You can see the gap at 329.63. And you can see we traded pretty much below it all day. And then it just kept getting rejected and sold off, closing at the lows. So to me, looks like SPY's going down to that 321.50 area. We'll probably get some reactions, maybe a rally down there. Bigger picture, though, if you look at the daily, what do we have going on? Well, we had a false breakout right here. And the selling is intensifying. You can see this was a bull trap, and as soon as we came back into the range, the selling's just really gotten pretty impulsive and strong. So we are, I think there's some more downside is what I'm trying to get at. Also, big picture, one of the reasons why I've been bearish since I started my channel in 2018. I know it's been a few years, but here is the 2009 lows in the S&P 500, and here's the trend line that I marked out on the weekly chart. So this is capturing kind of the bigger picture. You have a reaction here, reaction here, reaction here, several reactions here, and then once we broke that trend, and we've been trading below bull market trend ever since that break in late 2018, which is when I started my channel and when I became, longer term bearish. All we've done is back tested from below. So you can see 2019 was a Fed induced back test where the Fed was cutting or was raising interest rates and cutting or they were pulling back on their stimulus. We got a little bit of a drop and they did a 180, started cutting rates and started providing stimulus. So you got the rally, which all it did is create a back test of the trend line. Then the COVID came along, it rejected that. The Fed cut interest rates more, did more stimulus. That created this impulsive knee-jerk rally almost back up to the highs. And then we're starting to sell off. We sold off, and then you can see this pullback here, we couldn't quite get to the previous high. So if we break this low right here at about where I think it's going, of maybe 321.72, if it can break and you get a close really below the previous low, then you're starting a downtrend. You've got a lower high and you'll now have a lower low. So that will be a weekly downtrend, which those don't typically just turn around, in the next week. They can last months, even years sometimes. So we will continue to watch that. There's a very good possibility that this is the ultimate high of the bull market. Now, a lot of people on this channel have heard me say this, and a lot of people think that we're still in a bull market because if you hide your trend lines, you just see higher highs. You don't, this just looks like you had a dip and then we're going higher and we keep making higher highs. You don't see broken trend, but I see broken trend. And that's why I was able to short right up here, because I saw that trend. We were back testing it. I got short, and I was pretty much short for the COVID drop. A lot of people were completely caught off guard. They didn't see that coming, and they say nobody could have predicted a pandemic, and that's true. It doesn't really matter what it was. The market wanted to sell off right up here because it was at major resistance. So maybe it wouldn't have sold off as much if it wasn't a pandemic, but it wanted to sell off. So we could, potentially be at or near kind of the peak of this, this rally or this bull market is, and we could be starting a bear market. And if that's true, I've got some longer term targets. I think we're probably going to head down to this 185.40 on the S&P 500, possibly going lower. And on Qs, my longer term targets are probably around this 117 and 99. That would be drops from where we're at now. Like in Qs, that would be a drop of about 63%, which is pretty much on par for a good, a bear market, basically, a solid bear market that is, right around there, especially in tech. Gold, you can see, continues lower. It's just cleanly downtrending. Here's your downtrend. Lower highs as you work your way down, lower lows, heading down to 1790. No stimulus, no market go higher. That's kind of how this works. And so that's a dangerous market, I think, to be long, where you have to have stimulus in order for the market to go higher. It's not based off of real strength. It's based off of the Fed, continuing to prop the market up. The Fed can only do that for so long. They know it. And if they do it too much, they can cause some really severe damage to like the dollar and other areas that are harder to come back from. So to have a market, just realize, going back to this, just realize the Fed will be there to provide stimulus. They've proven that they're not going to go away, but they're not going to provide stimulus way up here at the highs. They're going to do it when the market drops a bunch. Then they'll come in and try to save the market. Apple here on the daily, clean breakdown of support. So this is now resistance 112.85. Kickbacks to that level are opportunities to sell the rip. Next level of support is going to be probably down around, we got kind of this chop zone, but I would say probably down near the lows of that area, possibly right there at 103.15. We'll mark that out in case that provides a area of support. But we've broken support now, so I think we're heading down to the next level. Potential head and shoulders here in Microsoft. It's not as clean as it would have been, but here's your left shoulder, and then you have the head right there, and you've got the right shoulder right there. So the neckline sits right about 200 or 199. We'll just call it Really, I just say the lows. You just go below the lows. 196. A break below 196 and a daily close down there will probably set the impulsive selling down. And I think we'd head down to this trend line here in Microsoft. Here's your trend line. We probably head down to this 164, 166, depending on when we get there. Maybe up 170. I don't know when we'll get there, but that trend line right there. Get rid of that line. Yeah, down here. Same thing in Google. Potential for a head and shoulders. Shoulder, head, shoulder, neckline. It's not the cleanest neckline, but, you know, probably down below this 1484. A break and close below that. Should set this thing up to the downside. Tesla here, kind of eyeballing this one. There's a lot of, this one's been pumped up. So anytime anything's been pumped up and you start getting really, bearish price action and momentum to the downside, these high flyers are the ones that have some of the best opportunity to short. So you can see here, we had this support level. We're right at it. You could just, I could move this line down and cap, if I can get rid of the, this line tool, I could move it down to there, and we're closing kind of right at support. So we'll see how this behaves. It's not impulsive of a breakdown enough for me to say, okay, this is going to be a complete breakdown in Tesla. I'm waiting for some more impulsive sign and just not seeing it quite yet, but could be there. So we'll keep an eye on that. Adobe breaking down again today. It's just more bearish price action. So this thing's going lower, I would say. Very high probability that does. Here's your daily. And you can see here's your uptrend line. Today we had a gap down and impulsive selling. So that's a sell signal. And that sets us up to head down to 424 about. PayPal down 4% today. This thing's looks like it's going lower as well. We've got some support. We're coming into around 190. And it's about 190. Some support there, might get a reaction there, but I think that's going to break, and I think we're heading down to fill this gap. So just continued action on that one to the downside. Gap is down 139, so that's down there a ways. This is this looks like a good trade to me, and we could have the potential to fall 33%. This is a swing trade. It's not going to happen all at once. It's going to take time, but I think a month, 2 months. We might see price action down in here. Zoom. So I took a short position in this one today, and let me show you guys what I liked about it. It's not the best yet because the price action wasn't completely confirming, but it's just starting to show signs that it's going to go lower. So I took a starter position. That's kind of how I treat it. If I have a clear picture, I'll take a larger position. If the picture's not firmed up yet, but it looks promising, I'll take a starter position. So Zoom, here's what I got. We got this flag action that this thing's been doing over the last few days. I think that, ultimately, I think we're heading down to at least this trend line, kind of a minimum target. And from where we're at now, that's a drop of about 7.5% more to go. So I think we're going to get that. That will, and we've been flagging. We just broke the bottom of the flag. So here's the bottom of the flag. You can see all these reactions that we had on the hourly chart. Broke it and just back tested it today. But the last hour of the day couldn't get above that and, continued to sell off. So tomorrow, I bet what I would say if I had to, I did bet on it. I think we get a gap down and it continues lower. And this one has the potential to go a lot lower because if you look at the daily chart, big daily negative divergence on the daily where the prices were moving higher and yet the momentum is really starting to fade. So this trend line down here might just be the first stop. I think it probably is going to break. And ultimately, I think we're going to head down to maybe 320, 326. I've got some levels marked out. We'll just take that as it comes, but I do think we're heading lower as of right now. Mickey D's continuing lower, closing at the bottom of the day. Just really weak bearish price action today. Gap down and a sell-off. That's what you want to see when the momentum's to the downside. So right now, we caught this trade on the initial breakdown right here. And the reason why I spotted it as a bearish trade is because we had negative divergence. So it told me momentum was rolling over, and yet it hadn't showed up in the price yet. You really started to see the negative divergence show up right here. That's where it started to show up. And so that told me that price was likely to start to roll over, but you have to wait for the breakdown of the trend line. We broke right here, so I got short. And from that breakdown, it is down, about 5% or so. Probably a little bit lower. Maybe looks like we'll get a reaction around this 213.50, but I think the target for this one still looks good at 202.82. So we're going to continue to let this thing roll over. Intel continues to show me that it's going into a bear market. It's down almost about 18% in just 5 days, roughly. So that's pretty bearish. That's bear market price action. Swift moves down. Things take the elevator when they sell off. So there's no way to spin that except for bearish. And when something's bearish like that, it's not going to just stop right here. It's most likely going to continue lower. Peloton hung in there. A little bit of a whipsaw breakdown yesterday, and still hanging in there. So this might want to run up and tag this level at 126.50. That should hold as resistance and then move lower. I think Peloton is going lower. Of course, it could go a little bit higher first. But, there is no negative divergence on the daily. So I could see this thing making a new high, popping up and making a new high if it did it soon. And that would create that negative divergence on the daily. We just don't have that yet. So that is one thing that tells me that there is the potential for this to make a new high. Just a marginal new high. Probably wouldn't be much beyond this, this level right here, which is about 140. But it's possible. So we'll watch that. But ultimately, we've got this trend line right here in Peloton. And I think we're going to come down and hit that trend line and probably break, but again, that negative divergence in the daily might need to show up first. And in order to get that negative, and this is the weekly, we don't have any negative divergence in the weekly either. So in order for that to show up, we would have to make a new marginal high. So that's completely possible. I'm going to look for that. Etsy here looks like it's continuing its downtrend. So here's your daily chart. This is your uptrend right here. We broke trend, did a back test. I got short right here on the back test. I didn't even look at the stock until it was at the back test. But when I noticed it was doing a back test and it was right at that level, that was just good timing to see that and get short. So I got short. We had the initial sell-off, little kickback rally. Looks like we're continuing the sell-off. So this thing looks to me like it's going lower. And we've got a couple levels marked out, but 120. Next level is probably this 128.45, and if that doesn't hold, 121. BBY, Best Buy, they were talking about that on CNBC today. It's funny. I saw some headline that said this thing's a buy because it sold off. And it's funny because I see it the completely opposite way, and that's what makes a market. But here's the technicals. Daily chart, uptrend line right here. And you can see negative divergence right there. The negative divergence, it's also on the PPO. And it really started to show up right here on this high. So that tells you that price was about to break. Looking for the trend line. There it is. We got the break of the trend line. There's a gap down here. That's the target. This gap fill right there at it's about 91. We'll call it 91.20 or so, 91.50. You always want to step in a little bit early, but looks good. And if you look at the PPO, you can see we got a crossover right here where the fast line just crossed the slow line. We had a high level crossover. So that tells you that the momentum is bearish in general. That coupled with negative divergences, break of price support, there's really no other way to spin this but bearish. So we would expect to see, I'd expect to see this gap fill. I'm not short this one. I didn't catch it quite in time. I don't like, it's a little far away from the trend line. So there's risk, there's elevated risk now that you get a kickback rally and you start taking on some more losses, or it could even kick back for, a bunch more. But yeah, if you go to the hourly, I think the hourly here, and you've got this gap. I don't know where that trend line, you got this gap right here at 113.40. That might be an opportunity to get short, or if it does, obviously a full back test would be an opportunity, a full back test of this trend line, maybe 116.50 or something like that. I'm going to wrap up with Walmart. Haven't talked about this one for a while. I was short this a little while ago, but look what we got on this. So this is a weekly chart. We're looking at kind of bigger picture pattern here, but you've got this bearish rising wedge. And that's a bearish pattern that should break to the downside. However, it didn't. It broke to the upside. They came out with they floated some news about them doing online sales or something like that. And the stock rallied off of that. That looks like it's starting to fade. Now, because this is a bigger picture pattern, what I would look for is a break. We went up on a bearish pattern. That usually doesn't happen, and when that does happen, oftentimes it's just the kind of a fake out move before this wants to make the real move that it wants to do, which would be a bearish move. So what I would look for is a break back into the wedge. If it breaks back into the wedge, most likely when these things break back into the wedge after going to the upside of a bearish wedge like this, they're going to break the bottom part of the wedge and start to head lower. So that could be a potential trade here in the future. And that's a move of, 20, this could be a 20, 30, 40% trade here in the future. So we're going to watch that. I'll keep an eye on it. The other thing to note is big bearish divergence, negative divergence on this weekly chart. So all this price action right up in here is all divergent highs. And so, yeah, we're seeing the setup for a trade to do that to the downside. We just need to start to see, some other signals. And there's not really, I don't see anything on the chart to really get a jump ahead of this. So I would just wait for this breakdown of this 127, 128, depending on when it actually gets to the trend line. And that would be the sell signal. I'm going to take a sell signal on that one. Okay, that's all I got. So if you guys find value in this, leave me a thumbs up. I'm going to continue working on my trading course. I finished another video yesterday, so I've got I don't know, 4 or 5 more videos on various topics to make. Again, the trading course is going to give you the tool set to be able to really use what I use when I look at charts and how I trade. So it's not going to be a cure-all. I'm not going to give you just the instant ability to just make tons of profit, but it will be able to sharpen your tools and your skills so that you're looking at the things and getting you the point of the thing. The point of a course like mine would be, a lot of people when they start trading, they're not even in the ballpark when it comes to having an opportunity to be long-term successful at it. So I want to get you guys in the ballpark. I want to show you the game that's being played, how they're playing the game, and that will give you an opportunity to learn the things that are important to learn, throw out all the rest, take CNBC and just huck that channel out the window. It's not going to help you. And so I want to give you guys the tools to be in the ballpark to learn how to, be good at this. And that's why, like today, to give you an example of the headlines, I just want to talk about this real quick. The headlines I see on CNBC right now are that the market's now worried about COVID rates increasing. But the reality, that's just a headline that they use. The Wall Street makes money when stocks go down. They want to be able to sell stocks down. you have to understand 401ks, money flows from Main Street are bullish funds. They all go into bullish funds. The 401ks, you can't get a short fund for the most part. So they all are bullish. They only make money when stocks go up. Wall Street taxes that, and the way they tax that is to sell, to bring stocks down. And by bringing stocks down, they are able to take that money and transfer it to themselves. So, but they need a headline to do it. And the COVID rates have been going up for a while. So, okay, guys, sorry, I had to take a quick call. But the point is, the course is going to give you some skills that will help you find stocks, will help you analyze the stocks, and give you the highest probability to be successful in trades that you take, or even in your long-term investing. Nothing's guaranteed. It's all about probabilities. So thanks, guys.